Good morning, everyone. Welcome to today's webinar event. My name is Joshua, and I'm going to be your presenter. We're here to talk about accounting and recording, tracking loans or mortgages in the Church Windows accounting module. Before we get started, just a few technical things. If you click the little red arrow on the sidebar of your webinar control panel, allows you to minimize the webinar control panel, get it out of your way. This is particularly important if you use or have a single monitor setup. If you have a dual monitor, you can go ahead and just drag that control panel off to your second desktop, again, just to get the full visual effect of the presentation. We're here until 11:50 today, so about 20 minutes. It'll probably run pretty close to the full 20 minutes on this. We are recording today's webinar event simply for the particular version that we're setting this up on today. So this video will be out on our website here sometime within the next week or so, maybe sooner. Just so folks know that if you're interested in it, we go to our website here now, and we go up to our support center, type in the keyword loan or loans. Let me introduce my highlighter here. We've got a video and a document right here on accounting, loan, and mortgage tracking that's already here on our website. So if we click on that, we've got a video down here at the bottom, and the document that we're using for our presentation today is right here, this view or print PDF about loans or mortgages. So while folks can learn and do learn visually through things like our video here, but if you learn by reading things about things, the words rather than the pretty pictures here, you may want to visit the document on the website, since that's what I'm using. It does include all kinds of the accounts that are involved, the different methods that are, the 4 different methods that we have for recording loan and mortgage tracking in Church Windows, as we see here, method 1, method 2, further down the page we've got in the other pages methods 3 and 4. So again, that's what I'm using as the guide for the webinar event today. So again, if you have questions for me, please type those into the questions portion of the webinar control panel. Please keep the questions on topic, meaning about our loan or mortgage tracking in the accounting system. If you have questions about other portions of the software, our support technicians are available today to help answer those. But if you do have a question and it is specific to your data, I probably will put it off to a support call, asking you to please call us on support, since we need to know more about your particular data or your setup of your chart of accounts. All right, so let's dive right in. So in accounting, there are several ways to record loans or mortgages in the Church Windows accounting software, okay? Per that document, method 1 is to simply go into Enter Bills and record, a credit to, the mortgage payable account, debiting expense account of your choice, that, for the full amount of the actual amount of your monthly payment, okay? You have one called mortgage expense, and all of your interest in your principal is tracked to that one particular expense account. The balance of the outstanding principal balance of the loan is not recorded or not shown, except in your transactions through your bill and your payment transaction, okay? That's the simplest and easiest way to post that. Again, one vendor or liability, one expense account, and you just go in and post the bill and the payment for the amount of the mortgage and the mortgage principal and interest combined to one single expense, okay? Method 2 on our document talks about expensing the amount of the payment for the principal and the interest each month, okay? So if we were to go in and to choose our mortgage payable here, when we come down, we would enter comments of some kind here. And then when we go down to our expense/income account, if I type in mortgage, notice here we've got two different expense accounts, so say for mortgage interest expense, so here we're going to type in a debit amount of, say, $350, and then we're going to click the plus sign to the right, and then we're going to put in the principal that we're paying down that month. So, whoops, sorry, that's the account. So here's our mortgage principal expense, and we're going to say our mortgage principal that's being paid down is $650. So then our total payment for, again, folks, and I'm just using very simplistic figures here, is, our monthly payment of our interest and principal combined is right here, $1,000. That's the amount that I want to pay my mortgage company or the mortgage holder or the lender, whomever that is. Okay, so once I have that total amount correct, I'm going to simply do done add to batch, and I'm going to do post and pay these bills, and then I'm going to record my payment, okay, to my vendor. Again, through this method, there is no amount that shows the principal balance is not recorded in Church Windows in any way, whether it's on my balance sheet or my treasurer's report. Again, the amount of the loan principal remaining that I owe after each month payment is not recorded in Church Windows, okay? The bottom of the first page there of our document shows the effect of the transactions, of these particular transaction, the bill and the payment, on all of our respective accounts. Again, it shows an increase to the interest and principal expense to show that we've expensed that money out of our general fund. The general fund is reduced by the amount of our $1,000 because that's the fund to which our principal and interest expenses are linked. It credits that balance into our mortgage payable account for $1,000. Then our payment debits that mortgage payable for $1,000 and credits our checking account. The net effect on our mortgage payable account is zero. Again, remaining principal balance is not recorded. Okay. So this is, we kind of move through those two particular methods pretty quickly because most of the time churches do want to record the amount of the principal or interest, the remaining principal balance that's being recorded, that's on the loan or the mortgage on their balance sheet each month. Okay. Your finance committee or your board or whomever, or your trustees wants to know here how much of that outstanding principal balance do we owe on that loan, and they want to be able to know that at any particular time. Okay. So method 3 of our paperwork here is now then reflecting the amount of the loan principal on our balance sheet and is reflecting it as a reduction each month. Okay. So just by way of kind of verifying that for you, if we go into financial, here under reports, financial and balance sheet, we go, okay, we're going to run it as of April. We go to print. And what we're really here to show is right here under our 200 accounts, we see, let me zoom in here, down near the bottom, we've got our mortgage payable right here. So right here we can clearly see our mortgage payable is $219,500, okay? That's how much of that principal is still owed, okay? So method 4, assuming we've got that loan liability principal balance recorded in here, okay, it's going to show what we're doing on each month on method 3 is we are expensing the amount of interest that the church is paying each month, but we're not expensing the amount of principal, okay? So basically, if we go back to our example of our bill that we have currently set up and sitting in the system right here under Enter Bills, okay, we're going to bring that back up to the top. We're going to take away our interest or our principal expense here, and we're just going to show our mortgage expense, the interest expense on our treasurer's report, not the principal, okay? So then when we click Done Add to Batch, we go up to our Show Running Balance button up here in the upper right corner, And we show here that, again, our mortgage payable balance, the current balance was, again, the $219,500. Our transaction effect was $350. We're adding in the $350 to our mortgage payable balance, okay? That amount of that interest we're adding to that principal balance. That's perfect. That's exactly what we're wanting to do. So we're going to go ahead and choose post and pay these bills. We're not going to print our transaction here, of course. Okay. So it's now, here we are at pay bills, recording the payment for our mortgage for the month of April, say, in this case. Okay. But as we clearly see on our payment here, our amount to pay is only the amount of the bill, which is $350. Well, that's not how much we want to actually pay, because that does not include our principal that we're paying this month, okay? So we have to adjust that amount to pay. So we're going to click right there where it shows amount to pay, and we're going to change that to $1,000, okay, which is the exact amount of our payment, okay? And we're going to choose the appropriate payment method that best supports how that month's mortgage payment is being paid. And so in this case, we're going to say we're paying it electronically. I can choose any payment method, of course. But the real thing that we're here to check is this show running balance button again. I'm a big fan of the show running balance button, folks. If you attend my webinars or talk to me on support calls, this screen is vitally important. It's right up here. It's on virtually all of your transaction screens. It simply allows us to see the effect of our transaction on the respective accounts before we post anything. Essentially, it minimizes our mistakes, okay? So once we click on Show Running Balance, it shows, again, our current balance of our mortgage payable of the $219,850. That's the principal amount with the added interest that we added. It shows the full deduction or reduction in the mortgage payable of the $1,000 payment that we're posting. And it now shows an adjusted balance of our mortgage lower by the amount of our principal down to the $218,850, okay? Why this is important is because this is essentially self-adjusting, okay? So the remaining balance of the remaining balance of the principal balance on our mortgage payable is exactly what I owe in terms of my principal, okay? So that account balance is self-adjusting, okay? So I would go ahead and post that transaction then. Let me get rid of my drawing tools here. And we would post that, and it says, oh, that's all right, don't worry about it, the associated asset. So it tells us that the payment's been posted, we're good, okay? Now, the one final portion of that transaction is that, when we go back to our balance sheet here, we show that our principal balance liability account has been reduced by the amount of that particular amount of principal. But what we've deviated from is our our mini little balance sheet equation of our $1.5 million fixed asset total no longer balancing with our mortgage payable of $218,850 plus our fixed asset fund down here. Okay, so if I add those two, the liability and the fund up, they're going to be less the amount of the principal that I've paid down, okay? So the final transaction I need to post on this is I now need to go into, say, my transactions, other, and journal entry, and I now have to post a journal entry as of today's date that, say, debits my general fund, okay, my general operating fund, by the $650 of interest or principal that I've paid, and I need to now credit that over to my net fixed asset fund, okay? The reason being, again, is because I now own less principal and I own more equity, okay? So now when I clicked on Add to Batch and Show Running Balance now, I'm showing that my my net fixed asset fund balance is higher by the $650, which then offsets the amount of my loan principal liability that I've reduced, okay? So then I would simply post that, and my balance sheet, mini balance sheet equation between my fixed assets equals my loan liability balance plus my net fixed asset fund balance, okay? All right, so that is, again, we're still not showing the expense principal paid on our treasurer's report each month through method number 3, okay? All we're showing on the treasurer's report each month is the amount of interest that we've paid down, okay? Which then now brings us to option number 4, method number 4, okay? Which is very similar, except we do want to see both our interest and our principal paid on our treasurer's report each month. So we're back to our enter bills, pay bills process. We're going to choose our mortgage payable. We're going to come down here and we're going to choose our mortgage interest. Again, we're going to put on our $350. We're going to tab down. We're going to choose our mortgage principal expense. And we're going to put in our $650. You put in any necessary comments. Excuse me. We're going to click Done, Add to Batch. Again, clicking Show Running Balance. So we've increased our mortgage interest principal expense accounts. We've added the $1,000 into our mortgage payable. So we've brought that then up to $219,850, okay, which is exactly what we're wanting to do. Then we would click Post and Pay These Bills. Now notice that because they were entered as bills, the amount to pay is the full $1,000. But notice now my adjusted mortgage payable balance is back down to the original $1850, which was the original amount of the principal or amount of the balance, the principal balance before I started my transaction entry today. Okay, so there's been no reduction in the principal balance whatsoever. Okay. So now what we have to do, we're going to do, again, we would choose the appropriate payment method that we would do. We would click Post. Again, folks, that's just a message warning us that the asset account that's linked is different. Don't worry about it. We're not going to print this. So again, I still have to go in and post a journal entry that reduces, that again keeps my mini balance sheet equation between my fixed assets on my balance sheet in balance, combined with my loan mortgage principal liability with my fixed asset fund in check, okay? Right now, it starts the day and it doesn't appear that I've paid any principal balance out of that liability account. So I still have to go back to my journal entry transaction, okay? And so I'm going up to Transactions and Other and Journal Entry Transaction, and again, we're going to date this today. But this time, the account that we're going to wind up debiting is our mortgage payable balance, and we're going to debit that now by $650 because that's the amount of principal we've paid today, okay? And we're going to credit, again, our net fixed asset fund. Okay, and crediting that $650. Okay, done, add to batch, and show running balance. So, again, now it's showing the transaction effect on our running balance window here to show that our mortgage payable has been reduced by $650 and our net fixed asset fund balance has been increased by $650. Again, that we owe less on the mortgage principal and more equity in the church land and building. Okay? So ultimately, folks, the point of this being is when the loan payable balance ultimately gets back to zero, the fixed asset fund and the fixed assets on our balance sheet will be equal and the loan mortgage principal balance will be zero. Okay? So again, by way of just kind of concluding this with about 30 seconds left here, when I get out my calculator, my $1.5 million fixed asset, land and buildings, furniture and equipment, fixed asset total still equals with my $218,200 plus my $1,281,800 net fixed asset total, okay? So it all depends on how folks want to see these on reports ultimately. So again, most commonly, if it all boils down to, does the church want to see the remaining principal balance on the balance sheet each month? And if so, you're going to be looking at methods 3 or 4. If you're not, you're going to be looking at methods 1 and 2, okay? If you have questions or problems with this, please give us a holler, 800-533-5227. Any of our technicians who are skilled in accounting are happy to help.